Hi, today is Monday, June 9th, 2025. The 4-day holiday is over. I feel a little bit tired. Not necessarily because I had a good time over the weekend, but because I jogged for 30 minutes yesterday. It was real jogging. I didn't do jogging for a while. So today's jogging was really, yesterday's jogging was really tiring, but it was really enjoyable, very liberating. I felt like rejuvenated. I hope this month will start off nicely, and I wish I get a nice peace in mind and everything goes smoothly. Yesterday, I came across stablecoin. Actually, I've encountered the word stablecoin many times on the news, but I didn't know what they are. Probably my guess is that the stablecoin refers to the famous, popular, most traded uh, cryptocurrencies such as Bitcoin, Ethereum, Filecoin, Doge, and some other coins. Let's find that out. Let's find out if that's true or not. This article was generated by Google's Gemini, right? A stablecoin is a type of cryptocurrency designed to maintain a stable value, typically by pegging its price to a reference asset like a fiat currency, for example, US dollar, or a commodity like gold. Stablecoin is a type of cryptocurrency designed to maintain a stable value, typically by pegging its price to a reference asset like a fiat currency, for example, US dollar, right? Or a commodity like gold. This contrasts with other cryptocurrencies like Bitcoin, which experience significant price volatility. So basically, it's another facet of dollar, right? If it's pegged to a dollar, then that stablecoin represents that dollar. It's just that it's a dollar traded over the internet, digitally, right? So not much difference. Here's a more detailed explanation. Value stability. Stable coins aim to keep the price relatively stable by tying their value to a specific asset. This makes them less prone to the price swings seen in other currencies, in other cryptocurrencies. Pegging mechanism. The stability is achieved through various mechanisms, including a fiat-backed, crypto-collateralized, algorithmic. Fiat-backed stablecoins backed by reserves of fiat currencies, like the US dollar, where the issuer holds the equivalent in fiat currency for each stablecoin. Right. Where the issuer holds the equivalent in fiat currency for each stable coin. Crypto collateralized. Stable coins backed by other cryptocurrencies, often requiring an over collateralizing to ensure stability. Algorithmic. Stablecoins that use algorithms to adjust the supply and demand based on price fluctuations. Crypto collateralized. Stablecoins backed by other cryptocurrencies, often requiring an over collateralization to ensure stability. I don't know how it works, right? Uses. Stablecoins are used for various purposes, including trading crypto. They are commonly used for trading other cryptocurrencies as a less volatile store value. Digital payments, they facilitate faster and potentially cheaper cross-border payments. DeFi applications, they are integral to decentralized finance, DeFi applications, providing a stable medium of exchange in smart contracts. DeFi applications, digital payments, trading crypto. Risks. While stablecoins are less volatile than other cryptocurrencies, they still carry risks, including peg failure, issuer solvency, technical vulnerabilities. Peg failure. The value of the backing asset can still decline, potentially causing the stablecoin's peg to fail. Issuer solvency. The issuer of the stablecoin could face financial difficulties, impacting the value of the coin. Technical vulnerabilities. Algorithmic stablecoins can be vulnerable to technical glitches. Well, that's it. But let me go over to this one, right, by CNN. This is from CNN Business, New York. Stablecoins are on the verge of going mainstream, analysts say, as a landmark regulatory bill makes its way through Congress. Really? The Senate is deliberating the Genius Act, which would provide a framework for regulating stablecoins. The bill last week passed a major procedural hurdle in the Senate after initial resistance from some Dems. Stablecoins are a type of crypto asset that is tied to the value of another asset, such as the US dollar or gold. They were initially created as a way for crypto investors to store their money, but have grown in popularity in recent years for their use in digital payments. The landmark bill would provide a boost of legitimacy to the crypto industry and is another example of how cryptocurrencies have had a major revival under President Donald Trump's second term. Proponents of crypto have welcomed the focus on advancing stablecoin regulations. Critics have pointed to the Trump family's ties to the crypto industry. For example, World Liberty Financial, a company tied to the Trump family, has issued its own stablecoin, while the UK is magnet for scaling digital and technology businesses. Stablecoins seem to be here to stay, analysts at JP Morgan Chase said in an April note. A few years ago, we probably would have debated the accuracy of that sentence. Not today. How do stablecoins work? While cryptocurrencies are known for being volatile and fluctuating in value, stablecoins are supposed to be, as their name suggests, stable, right? This is because stablecoins are pegged one-to-one to another asset. Pegged one-to-one to another asset. They are most often linked to the US dollar, making one stablecoin worth $1. Companies that issue stablecoins are meant to hold reserves of other assets to block their coins and assure buyers about their value. For example, a company issuing stablecoins pegged to the US dollar could hold cash or cash equivalent assets like short-term US government bonds. Two of the major stablecoin issuers are El Salvador-based Tether, which uses USDT, and US-based Circle, which issues USDC. And both of these stablecoins are pegged 1-to-1 to the dollar. Tether's stablecoin has a market value of just under $154 billion and accounts for 62% of the total stablecoin market, according to data from CoinMarketCap. Circle's stablecoin has a market value of about $61 billion and accounts for roughly 25% of the stablecoin market, according to data from CoinMarketCap. Rise of stablecoins. The total market value of stablecoins surged from $20 billion in 2020 to $246 billion in May 2025, according to analysts at Deutsche Bank. Stablecoins emerged in 2014 as a way for crypto investors to park their money while buying and selling other more volatile cryptocurrencies like Bitcoin. Since then, stablecoins have ballooned in popularity, particularly for their potential use in digital payments, said Daryl Duffy, a professor of finance at Stanford University. Visa in May announced a partnership with Bridge, a stablecoin company owned by fintech startup Stripe, to enable payments using stablecoins in countries across Latin America. Stablecoins, given their stable value, can serve as a medium of exchange and function as a digital currency. The crypto coins have emerged as useful in helping speed up payments across borders. Cross-border payments are providing the most exciting new use cases, Duffy said. Making a payment such as remittance or vendor payment to or from an emerging market country can now be made faster and at lower cost than a conventional correspondent banking payment. Risks. While stablecoins are significantly less volatile than other cryptocurrencies, they are not without risks. If the assets backing the coin drop in value, the one-to-one peg falls apart. It could cost the equivalent of a bank run, said Duffy. Stablecoins gained notoriety in 2020 when Terra USD, an obscure type of coin called an algorithmic stablecoin, crashed in value and caused a panic among investors. Notoriety. There are also security risks, like people forgetting the passcode to their crypto wallet. Right, passcode. Significance of the Genius Act. The Genius Act stands for Guiding and Establishing National Innovation for U.S. Stablecoins of 2025. The cryptocurrency industry during the election cycle poured money into Trump's re-election campaign and congressional races. This is the return on investment for the campaign spending by the crypto industry. Hillary Allen, a law professor at American University, told CNN's David Rind. In the if the legislation passes, it could usher in mainstream adoption of stablecoins for digital payments and spur growth in the stablecoin industry, said Christian Catalini, founder of the Crypto Economics Lab at MIT. He added that traditional Wall Street firms and startups would also compete to offer stablecoins. For the major stablecoin issuers, the Circle would likely benefit from increased regulation more than Tether, as the Circle is a US-based company while Tether is based in El Salvador. Dale Wright, a law professor at Louisiana State University who specializes in crypto, told CNN. Others have pointed out that the Genius Act doesn't adequately address the risks associated with stablecoins. As with banks, the U.S. government should tightly regulate stablecoin companies to protect consumers and the economy from financial crashes. Amanda Fisher, policy director at Better Markets, a nonprofit advocacy group, said in a statement, "The Genius Act instead exposes taxpayers to crypto-fueled bailouts by providing a dangerously weak regulatory framework." Stablecoins are on the cusp of mainstream adoption in 2025 as the U.S. pushes forward with the landmark legislation, analysts at Deutsche Bank said in a May note. Despite some resistance in the Senate, the analysts still expect progress this year. So Tether, Circle, cryptocurrencies, and a variety. That's just wrap things up for the word stablecoin. There are many, but two are prominent. One is the Tether, the other one is the Circle. Thanks for listening and have a wonderful Monday. I need to snooze a little bit. I feel groggy now. Right.